But we now have Ms. Yolanda Chung, Head of Sustainability of DBS, Dr. Baipo, CEO of Metaverse Green Exchange, best-selling author Krisa Pakitas, founder of Pakitas Advisors, who will further explore sustainable finance role in our transition to a net zero world. Moderating the discussion will be Mr. Brian San, Executive Director for WMI. During the session, please feel free to put any questions you have in the Q&A window, and we'll address these live during the session. Over to you, speakers.
Great, wonderful. Well, a very warm welcome and a good morning to everyone. So as Yolanda mentioned, my name is Brian San. I'm from the Wealth Management Institute. I'm very glad to be the moderator for the panel today. So today's topic is about sustainable finance's key role in our move to a net zero world, which represents both the existential challenge of our times as well as one of the greatest opportunities. There are some big numbers out there, and for one, the World Economic Forum has identified that approximately 50 trillion in incremental investments is required by 2050 to transition the global economy to net zero and avert a climate catastrophe. Financial institutions and investors both have a really important role to play in channeling capital towards the best ideas, companies, and solutions, including industrial decarbonization, ramp up of alternative energy sources, and for those of you who joined the MSCI keynote just now, other trends such as future of food, biodiversity, and resilient supply chains. Technology also plays a really important role. And as DPM Heng recently called it, at a digital sustainability double helix, with the two pillars, digital and sustainability, being the two key drivers of the future of finance. Now, we may know what each trend is individually, and one thing this panel will also address is how both these trends, digital and sustainability, come together. And so to guide our discussion today, I am very glad to have this wonderful group of esteemed speakers here with us, representing established financial institutions, innovative ventures and investors, and also global sustainability thought leaders and authors. So I'm glad to welcome Dr. Baipo, Yolanda Chung, and Krisa Pakitas. So let me start by asking each of them to give a short intro. Perhaps ladies first. So maybe I could ask Yolanda, followed by Krisa, and then Dr. Bai.
Thank you very much, Brian, and hello to everyone who have afforded us the luxury and the time to speak to you today on sustainable finance and what professions this has spawned as a result. The agenda really has been gaining momentum. At DBS, what my team does is in three main areas of responsibilities. First of all, we conduct environmental and social due diligence on the financing that we do. In practice, this work entails sometimes going on site visits, speaking to our clients directly to understand the environmental and social impacts arising from their projects and assets. This is particularly important when we are doing long tenor financing in project financing, whereby you can draw a boundary around the asset and measure the impacts associated with it. The second area of responsibility that we do is broadly described as sustainable finance. It's the origination, it's the structuring and advisory to our clients when they want to tap into this increasingly big pool of capital known as sustainable capital. It could be a green loan, it could be a green bond, it could be sustainability linked derivatives. We serve across all our markets and across products and services. The third area of responsibility that we have actually is quite new. DBS signed up to become a net zero bank late last year. It means that we would like to transform our portfolio, the finance emissions in our portfolio to zero by 2050. And we are going to set ourselves interim targets 2030. In order to do that, a lot of work behind the scenes is now being done to understand the baseline that we are working on the transition with our clients, and working out the interim targets in order for us to get to net zero without a cliff drop. And with that, let me pass on to Krisa.
Thank you, Yolanda. Thank you very much, Brian, for moderating. Dr. Bai, it's a pleasure to be on the panel with you and really looking forward to this conversation today. The topic is near and dear to my heart. You can say that being in this space for over 20 years, you love it and you enjoy it and you want to share your excitement with others. because to your point, Brian, we have seen a lot of momentum and growth in this space of sustainable finance. My career has been grounded at the intersection of sustainability and ESG, financial services and real estate. The last 10 years of which I was first the head of green financing at Fannie Mae, where I launched the Green Bond Program, and then the first head of ESG for Fannie Mae as well. I left after 10 years to write a book called Chief Sustainability Officers at Work. It was a true honor to be able to interview Yolanda and learn about her personal and professional journey and the great work being done at DBS at Sustainable Finance, as well as interview other leaders in this space from Amazon to BlackRock and Procter & Gamble. Today, I advise my clients on their ESG journey, whether it's how do you talk to investors about the ESG journey, or how do you develop new innovative products to really capitalize on that double impact of business value and environmental and social value. So it's an honor to be here, and I'll pass it over to you, Dr. Bai.
Thank you, Krista, and then Brian, thank you so much for the invitation. It's very similar to Krista. This is a topic very dear to my heart as well, starting from 20 years ago as well, where I worked as a physicist, trying to develop endless energy through nuclear fusion. That still hasn't come to fruition yet. But I still remember 2009, when I was with Warburg Pincus and later as a partner, and I joined as the first group of people to establish the ESG committee at Warburg Pincus in 2009. And 2016, I established my own private equity firm called the Asia Green Fund to grow the company to be around the $2.5 billion asset under management, focusing on trying to invest in technology companies to achieve both financial returns for our limited partners, as well as measurable, quantifiable, certifiable environmental impact. I'm currently the chairman and CEO of a Metaverse Green Exchange. Our aspiration is to be the leading green fintech company to provide end-to-end services of carbon as a service that is empowered by blockchain and our own patents and our financial service products. On the upstream side, we help government to provide a new generation of a carbon registry, carbon trading system, and carbon infrastructure system. On the midstream, we operate a licensed platform in Singapore for carbon trading. On the downstream, which I'll share a little bit more later, is that we have developed a carbon ERP system for corporate clients to be able to monitor, measure, and audit carbon credit based on ISO standard. And then similar tool is also used by auditing firm trying to drive similar innovation as the financial ERP system has gone through many years ago to avoid greenwashing and so forth. So great pleasure to be here to speak jointly with my fellow panelists, Yolanda and Krista. So thank you, Brian.
Okay, thank you so much, everybody, and really bringing fantastic expertise to bear for this panel. I'm very excited for what's coming up. I do have a few questions to start, but today really is about yourselves and the audience as well. So please do put your questions in the chat. We'll put them live to the speakers. Really, we're here today to help you get the most out of this session. So while you're thinking of any questions you may have, let me perhaps first get started on a broad topic, one that directly addresses the title of this panel. So if I could ask the panelists, in your view, how can financial institutions and investors help industries achieve their green ambitions and work towards net zero? Maybe if I could start with Yolanda.
Certainly. Well, I think the very fact that the Institute of Banking and Finance want to do an agenda on sustainability really tells you that finance does play a very important role in allocating capital to the right places. Now, what are the right places? To us, increasingly, it is about promoting sustainable development. As a result, our role as an intermediary, as in capital allocation, and in also facilitating a lot of capital markets fundraising activities, we do have a role to play. I would say that 10, 15 years ago, banks were not expected to do this, to almost be a police or an arbiter of what is right and what is wrong. what is sustainable or green enough in anyone's definition. We know that there is no consensus on the one definition. However, that debate is now long gone. I think it is the conclusion that many of us have accepted that banks do have a role to play. Besides banks, asset owners, asset managers, insurance companies, we all have a role. But I would also say that at the same time, to balance that view, it is important to remember capital in a lot of ways follow innovation, follow company activities rather than spearheading them, because we will not be as familiar with the nitty-gritty of technological innovations that arise from industries. So we rely on the industry experts themselves, the practitioners, to tell us what is the latest, what is the cost associated with that, what is the likely projection of that cost reduction that would make certain green technologies to become parity to the current more polluting mode of operation. So I think, yes, it is important, but it's also equally important to remember capital in some way follows, and the industry and the governments themselves have to spearhead the action.
Thank you so much, Yolanda. And I think especially to this point about capital following innovation, we really do look to the innovators to come up with great products and financing solutions. And at this point, I wonder if I could ask Dr. Bai on your view on some of the more innovative products and solutions that you're seeing from your end and indeed creating yourself.
Yeah, indeed, I think Yolanda puts us in a very broader scheme, because DBS is a very large institution, really covers a very big spectrum of services. From my side, I'll cover maybe two smaller segments of that. One is more private equity venture capital space. One is more green fintech type of company, how we can contribute to this. The whole innovation, in my view, comes from two different angles. The first angle is really scientific and engineering innovation, which is why when I launched an Asia Green Fund in 2016 to be Asia's first and leading large enough billion-dollar private equity firm dedicated to green impact investing, people didn't understand 6 years ago. But now this has become a very popular topic. But 6 years ago, just to be very honest with you, we were very lonely, and most people think we were nuts. How do you find the capability to combine the financial return and the measurable certifiable green impact? It's much harder after 6 years than I thought. We have been generating very nice return, but what we found is the materials technology, the engineering technology, the scientific innovation, and then all that technology advancement is driving the innovation that it becomes a financeable products, financeable technology, and then that is making the whole private equity and venture capital firm to move more and more toward that space. So I think that's one. The second thing is over the past, particularly past 12 years since I've been doing carbon-related efforts, what I've found is there is almost like a vacuum initially in that intersection of financial service, carbon, and the technology, digital technology such as blockchain and metaverse. Some entity that possesses understanding of all three segments is actually very rare. It's almost like a vacuum. And then that is exactly where Metaverse Green Exchange, as a fintech company, that we figured by combining these three areas of knowledge and expertise, we can come up with innovative financial and financing technologies, such as we can solve the problem sometimes politicians are even struggling to solve in the carbon market, which have been in for 12 years. Nationally determined contribution, which for some of the beginner in the space on sustainability is simply a passport for carbon credits. Carbon credits as a part of result of the Paris Agreement and the Glasgow Agreement has a passport. That is why you began to see Indonesia and today India banned export of carbon credits. So how do you combine financial service industry, blockchain, and the carbon market to create an innovative product to solve that type of world-class problem? So that is where financial institutions or fintech companies can jointly propose solutions. So that is where a lot of exciting innovations that we're seeing in both the material science and engineer, as well as the digital science and the financial innovation. Thank you, Brian.
Fantastic. Thank you so much, Dr. Bai. And really, those two pillars of innovation, the material and the digital leading into the fintech, I'm just thinking such a wide variety of skills and career paths for those who are thinking of entering the sector. It's definitely such a diversity of opportunities that people have. Chris, I would love to hear your views, and especially bringing your wealth of experience from overseas as well. How this compares with what you're seeing with some of the best practices around the world.
You know, it's very interesting listening to Yolanda's comments and Dr. Bai's comments, because what for me they have continued to emphasize is just the breadth of financial services and also the multitude of integration points of sustainability within financial services, whether we're talking private equity, whether we're talking lending, whether we're talking even retail banking and consumer lending, even auto lending. There is an intersection point for sustainability and sustainability principles. And so perhaps for our audience, since we don't know what seat they have, but presumably something in financial services or the financial services industry, I think the first takeaway is you can, whatever seat you have, there is a place for a sustainability conversation in that product, service that you offer or technology that you're building. I think the piece that also for me is that there's a huge span of both some very exciting cutting edge digital solutions. For example, Dr. Bai, I'm sure you're going to talk more about it, but also maybe even some very boring, boring old structures like debt, like mortgage-backed securities. So that's the world that I come from, which is the mortgage-backed security world of Fannie Mae. Many of you may know, of course, Fannie Mae is an issuer of bonds backed by mortgages in the United States. They are traded globally, but only issued with collateral out of the United States. And I think the innovation there that I developed with my team going back 2010, it was a very lonely time, Dr. Bai, that it was a green loan, a green mortgage that had energy and water efficiency improvement or capital for those improvements to be made, which was then securitized and issued in 2012 as the first commercial mortgage-backed security in the United States. And so I bring that up because when we think about the need for green financing, sustainable financing, we have very much physical assets, commercial assets, again, things like real estate that still have a long way to go in order to contribute to a low carbon future. So there's, again, role, I think, for everybody in every seat. And there's still a lot of innovation that is waiting to happen with sustainability and sustainable finance.
Right. No, thank you so much, Krista. Speaking of innovation, and as Dr. Bai was mentioning, digital really is one major pillar of that innovation. Would love to ask the panel, what are the most promising areas you see actually where digital tools can be most useful in helping with sustainability solutions? And maybe if I could first come back to Dr. Bai and maybe map out for the audience the different areas that digital tools could be useful across the value chain. Because when you think of sustainability, you've got diagnostics, you've got climate modeling, you've got managing different projects, you've got what you mentioned in terms of carbon trading. Digital seems to be able to come in so many sections. Would love for you to help us comb through and what are the most promising areas that you're seeing where these two intersect.
Thank you, Brian. Krista, that was indeed a very good example, and I appreciate all those endless efforts when we were all lonely in that space. I use Krista's example, buildings, real estate. I use that as a starting point. For example, how the digital technology can be fully utilized along the whole value chain. And then Krista, after 10 years, hopefully the world can improve more substantially compared to the older process as well. Every building as a real estate starting point, in order to have a better green loan or green mortgage-backed security, green MBS product, every building now has a building management system. And then they have a lot of sensors compared to 10 years ago. Every lighting, every air conditioners, there are so many sensors, a SCADA system all over the place on every building. There are two leading companies aggregated them together. One is called Honeywell, one is called Johnson Control. That is software system, and the hardware system is called a building management system. BM system aggregate all those data into one data set. That is the building management systems. First step, first digital sensor, second digital BMS, the third digital twin. Based on BMS, based on the CAD system of the building, you develop the digital twin solution for the building, because every financial products, end of the day, is about information, is about the credibility, verifiability, traceability, immutability of information. So you build the digital twin to represent such a building with all that data. The fourth step is actually technology that we patented called NFDT, non-fungible digital twin. This is where we combine the digital twin technology with the blockchain technology behind NFT. So we termed it as NFDT. It really is the process to make a digital twin a possible assets, essentially a bankable avatar of the real world asset. But remember, the focus is a bankable avatar of the digital assets. Such a non-fungible digital twin not only captures the data information from the building management system, it also captures what we come from the traditional financial industry, the legal titles, the legal due diligence report, the financial diligence report, all those financial models, and so on and so forth. Based on the NFDT, now as a financial institution, you can begin to do different types of security. That is based on the contracts. The contract can be mortgage-backed security. Now we are essentially an avatar-backed security, which we call ABT, avatar-backed token, which is a term that we termed. That it is the token itself is another digital innovation on the security side as a fraction of ownership in some way. And that fraction of ownership in terms of payoff can be structured in many, many different ways. So Krista, when I was at Warburg, and then in 2008, 2009, unfortunately, we were the shareholder of MBIA. So we have to went through that whole process of MBS mortgage-backed security industry re-innovation. But with more data, with more information as underlying, hopefully in the future, you have a better chance from the first line of data to have that benefits of traceable, immutable, go all the way back to the end of the information of the building. Along the same way, once you have every single step of digital information, there's another security or commodity, depends on how you see that. I was arguing carbon is has a duality of a commodity as a security. I wrote an article about it. So you measure the carbon credit or the carbon footprint along the way. And then these are all the data supported carbon. So carbon is not a building, you cannot see it. It's calculated, it's measured, needs to be verified, needs to be certified, even more so than the traditional MBS business. It requires the digital technology to keep trace of every single step, to keep it traceable and immutable. So we have gone a long way compared to 10 years ago. The digital technology is changing the whole industry step by step. In the future, the people who are investing in those old MBS will be even easier to invest in a house avatar-backed token coupled with some carbon neutrality token, which we also produce. And then that'll be better for them to better make a judgment. And then to avoid, hopefully, the financial crisis, GFC in 2008.
Yes, absolutely. Don't want to go through that one again. Thank you so much, Dr. Bai. I think that was a really important point as to how one of the key benefits of the digital tools is providing that data, that verifiable, immutable data for tracking and measuring of carbon. Because if you can't track or measure it, how can you abate it? How can you do anything about it? It's related. We actually have one question from the audience about there are so many new cutting edge technologies and innovations out there, some of them not so easily understood. And how would you draw the link between all these various new innovations and digital technologies coming up with the actual impact of driving less pollution or improving recycling of materials, etc. And how would sustainable finance help in these areas? Perhaps if I could maybe point to Krista first, and then Yolanda to offer your views on this.
It's an interesting question, and I do appreciate a particular element that's buried within this question, which is we are still in a relatively nascent point in technology. even though it may feel like a long time, a decade, for example, right, Dr. Bai? Yolanda, you've been in this space a long time as well, right? Since CDP and before, so over 20 years. When it comes to actually technology and data, I actually think we're still in a relatively nascent point. So what I would say is my answer to this question, Brian, is that sustainability, technologies that help measure the impact and less pollution in the environment are still very custom, I think, to each industry because the data points are so specific. I think the most important innovation that we have coming up is actually technology that's helping to reconcile the data points. So whether we're using AI, whether we're using algorithms that actually reconcile different data points in order to figure out what the delta is the most important. So it's really a point of we're not there yet, but we're evolving as an industry.
And by reconcile, you mean just so many different data points out there. How do you know which one is true or which one's measuring the right things, and having that measurement is a base for action?
That's right, Brian. And even to put a finer point on it, it's to reconcile them and then actually to prioritize. I do think that because there are literally thousands of data points that a company can track, you cannot track them all successfully. Therefore, businesses need to decide what are the top 5, what are the top 10, maybe the top 30, but to try and track performance against 100, if not 1,000 data points coming from different data sources, not viable, not useful. So prioritization is key in addition to reconciliation.
Got it. Thank you so much, Krista. Yolanda, I would love to hear your views as well, and also from the major financial institution view in terms of where you see digital tools being used.
Yeah, I think it's a very apt question asking about if you were a bank, who are you to tell me what is innovation? How do we do cutting edge technology? I think for banks like DBS, you would hear a lot from the coverage team, the bankers, that they look at bankability. And if you talk to Dr. Bai from a PE venture world, they will be thinking about the investability. And we have very different risk appetites. That means that we have different tolerance level to the level of risk associated with the cutting edge technology. Very often, if it is a startup, the access to finance would first go to the venture firms and then the PE firms and then to the commercial banking world. However, these days, we often talked about blended finance as well. And the blended finance could be combining funders of different risk appetites, including sometimes development finance institutions who would come in to finance cutting edge technology at an earlier stage at a better rate of financing so that the startups can make use of their financing to scale. I would also say that we have seen in the market a lot of, in fact, a very crowded market of consultants and vendors providing different solutions. It could be ESG data, it could be about the use of blockchain to ensure traceability of commodities being traded around the world, many different aspects of it. And we have found that it is most useful to find cutting edge technology and solutions that are actually grounded in on-site research in some way. So for example, we came across firms who have had decades of experience. They've got thousands of auditors going around factories in emerging markets, understanding the environmental and social performance of those factories, whether it is health and safety, dormitory conditions, whether it is about the effluent discharge or air pollution that the factories belch out. They have been doing that for decades. And now they have become almost like a fintech because they can leverage those real data that they have gathered over decades, triangulate the data points, and do machine learning to have predictive analysis on what is likely to happen. And with that analysis, banks can come in with greater confidence to finance those cutting edge technologies.
Great. Thank you so much, Yolanda. The couple of points you mentioned about, as a bank and as a sort of financial institution, you really do look towards the innovators in terms of the solutions on the environmental side. We do have one question from the audience. ESG is environmental, social, and governance. Perhaps on the governance side, would you say that banks also have a large role to play in promoting governance, or in terms of also the relative emphasis between the E and the S and the G? A lot of focus we've seen, at least here in this part of the world, on the E. Would love for you to maybe speak a little bit about the G side of things and what you're seeing from your end.
Yeah, I think the three letters really have been causing a bit of confusion and also varying degrees of emphasis depending on that particular firm's interest. Governance to DBS is more than just corporate governance. It's more than just about gender diversity or ethnic diversity on the board. It's more than about the remuneration. It is actually about management systems and accountability to manage environmental and social risks. Who does what? Are those roles and responsibilities within our clients' companies well defined? And are they also being measured for their performance? So that is governance for us. It goes way beyond corporate governance as is commonly understood. I also think that very often people look at ESG or maybe sustainability as a catch-all term, and it's not helpful when you look at it as a catch-all, because then the room for confusion or the room for possible trade-offs amongst the different factors will become really intractable. So I think it is important for each company or individual to think about what is material, what is important to you. Is it human rights? Is it health and safety? Is it climate change? Then you can think about your career development, leveraging maybe your present professional experience and your interests. And also, to bring it all together, E, S, and G, they are all interrelated. If you tackle climate change, in a way, you're also tackling a lot of social issues because climate change is affecting the most vulnerable communities.
Fantastic. Thank you so much, Yolanda. And I loved how you sort of ended off with the career opportunities then, and that's sort of where I'd love to take the discussion, and seeing also from the audience that both careers and skills are sort of really top of mind for them at the moment. So I'd love to ask all three panelists, where do you see the biggest skills gaps and career opportunities in the sector? And there was a question of, does one need to be a scientist or investment banker in the industry to be able to start a career? Love to get your sense on what are the skills needed, but where the biggest gaps are, because I know that there are skills needed all over the places, but if the audience were to prioritize and say these are the biggest opportunities are here, would love to get your thoughts. Perhaps I could start with Dr. Bai on this one.
Sure, happy to. So I think the area that requires the most emphasis is interdisciplinary knowledge and expertise and capability. For what we are doing is actually quite a challenge. I've been running my private venture capital firm for the past 7 years. We look into many different technology companies. Like even in the first half of this year, we closed 8 deals, ranging from a hydrogen company, solid state battery company, a biosynthesis company. And if you look at the career track of all the people who are involved in the whole efforts, you have a lot of scientists. And then we mostly back PhDs and doctors who are driving that. But we also find out that the doctors usually don't do a good job in terms of building a business. So how do you combine doctors with the commercial guys? And then how we as a venture capital firm with the sustainability focusing to help them to put that together, to drive a business, come up with the products that they can sell from a lab bench scale to prototype, to commercial prototype, to build the factory, to sell, to marketing, and then to be able to build a business, to financing, and then eventually get to the stage that you're good enough to be able to get a bank to even lend the money to you. It's a very long journey, and it requires many different expertise. So I think many expertise have a role in this whole sustainability efforts play. So my general suggestion is always focus on where you're the best, and then trying to be more open-minded to add more interdisciplinary knowledge. For people who come from the finance and the accounting and this area, there's a huge play to be contributing to the sustainability as well. I still remember in 2019, I was trying to answer a very simple question that my fund, we have invested a fair amount of money by that time, and we own about 20 companies. I was asking, okay, for every $100 million of money that we put into our portfolio companies, I just want to know, quantify and certify, what is the environmental impact? Give me a number. Don't give me a score, because the score is very questionable sometimes, which later, as you guys we read again, gets into the greenwashing challenge. I'm a physicist by training. I just need the numbers. So I want to see how much carbon emission reduction was assisted by our investment. So I went to the typical financial ERP company. I said, hey, do you guys have a system and they can do this for us? No, they don't have it. And they don't even know how to do it at that time. So eventually the ISO standard is the one that we picked because it's ISO. And then we went to the certification firm, BSI and Bureau Veritas, say, hey, can you do a certification and a verification for us? So there's a lot of accounting, a lot of data sourcing, cleaning, and then education and so forth. For every one company of our portfolio, what I observed is that the certification firm usually sends around 600 to 800 emails back and forth with the Excel spreadsheets with those customers, and it cost me a fortune in order to certify, to tell me the number. Eventually, we got a number. For every $100 million US of investment, at that time, we generated about 20% annual return, which is okay. But also at the same time, we have a certified, ISO certified number of 1.1 million tons of carbon emission reduction that year, and then it's growing. That's the number that I need. And then I figured it was almost impossible for me to get that number. And then afterwards, at the Metaverse Green Exchange, we hired 55 programmers. Since there's no such a carbon ERP system that I can use, we wrote ourselves. And then now the system is there. We're partnering with one of the largest ERP software company in the world. We are rolling this out to all their thousands of customers. So that is the area where if you are a software, you have a big play. If you are financial auditor, come from that education, you have a big play. So this is a really interdisciplinary area that no matter which background you come from, you can find a place to contribute. And just look at me, even a physicist can be helpful in the real world. So.
No, absolutely. And you're so right. It's the individual areas of expertise as well. You need that interdisciplinary skill set to be able to tie it all together. Yolanda, the DBS, one of the largest employers in Singapore. Where are you hiring in this space, and what are the biggest skills that you're looking for?
We are really looking for people described by Dr. Bai, and they are very hard to come by. The people who are able to leverage their financial understanding, especially on banking, with scientific knowledge. I do find that it is relatively easier to teach people with a science background banking knowledge than vice versa. Having said that, I don't think it is impossible or improbable for bankers to learn about data analytics, to learn about AI, to learn about understanding the formulation of ESG data and the usefulness of the data, and then apply them in structuring transactions. With that, the transactional knowledge, knowing how to work with the bankers, with trade finance, with the operations team, having the right language to speak to clients is also very important. So I would say it is a little bit maybe broad to answer the question, but it does take all.
No, thank you so much, Yolanda. And Chris, I'd love to hear your views. I mean, you've seen sustainability teams across the world and at varying stages of development and varying stages of advancement. Would love to see where you see the biggest career and skills gaps, and perhaps maybe for those that are a bit ahead of Singapore, where are things headed for us?
Well, I think that the that fundamentally any product that goes out into the market does need a scientist's sign off. You do need that scientific credibility. Having said that, not every person on the team needs to be a scientist, but to Yolanda's point, does need to be able to speak the language, right? So you can't be developing a green financing product and not know what KWH is or what carbon is, right? So there's some fundamental languages or words that you need to understand and concepts. I will say, when I think about the individuals that I interviewed for my book, Chief Sustainability Officers at Work, many of the CSOs, Chief Sustainability Officers, heads of ESGs, managing directors like Yolanda in sustainable finance did have diverse backgrounds. Whether at Verizon, they were the Chief Procurement Officer and CSO, whether it was Coca-Cola, B. Perez, she's actually the Chief Marketing Officer in addition to the CSO, to even somebody like Kara Hurst at Amazon, who actually came from a more from a social side, for example, as well as an environmental side. You see a huge diversity. What these people do is, though, they build teams that creates that surround sound of expertise so that they have trust going out into the market with that final product. I think Dr. Bai's point about interdisciplinary is also key, and I will add one of my own. I think an important skill set for any professional in this field is to not be scared by ambiguity. This is a field where there is no clear roadmap to the end. We are all creating it every day. So if you are a person that likes to be handed a roadmap, these are the 20 steps that you need to execute, this might not be the field for you. Because you have to create it every day and then pass the piece of the roadmap to somebody behind you so that they can build it. So interdisciplinary, yes. Speaking the language, yes. But also your attitude really matters, which is it's ambiguous. You might not be able to calculate an ROI immediately. There may not be the variables, the data points, but you still have to forge ahead. So that's an attitude that I think is really important about professionals. We're not scared about ambiguity.
If I may just add to what Krista said, I really love what she just said. Having been in this space for so long, that attitude is extremely important. That can-do attitude. It's unclear how we get there. There are so many roadblocks, brick walls. You want to jump over, you want to bypass, you want to dig a hole to pass through it or break it, either way. So that whole attitude of solving the problem is extremely critical. That's probably even more critical than the knowledge and expertise that you have. So love what Krista just said.
Yeah, absolutely. I mean, it's such a new field, as you say, we're creating it every day. And so,
right.
so we need the creators to join us. Last 5 minutes, maybe I round off with our final question, and would just love to ask each of the panelists what would be your one top tip to leave with the audience today, in terms of sort of building a career and as well as knowing more about this sector. Maybe if I could start off with Yolanda.
I would say you need to thrive on a narrower area of interest. Sustainability tends to be very broad. And when you think about sustainability professions, people have certain images in mind. Work out what is that narrow area of interest that is most interesting to you. It could be about reporting. It could be about data. It could be about understanding climate change and how to tackle climate change in a specific industry. Work that out, because then you can focus your research accordingly. Don't try to go, try to capture it all. In addition, I know IBF has come out with a list of technical competencies. It is a very useful list of competencies that they have listed, looking at what it would take to do sustainability in finance. If you look at that list and you think there are...
I think we lost Yolanda.
Oh, I think we lost Yolanda. Maybe if I could ask Krista to pick that up. Oh, sorry,
Sure.
I think she's back.
Yeah.
Hello.
I would just
Hi.
say the IBF technical competencies list is very useful. It's a starting point for people to work out what would be of most interest to them and then find the courses accordingly.
Absolutely. Krista.
Or Yolanda, you are spot on. Food security is a sustainability issue, but it's very different than, gosh, green buildings. Totally different. I would build on that, Brian, and say, no matter what seat you have today, whether investor relations, marketing, on a structured deal team, IT, every seat is a sustainability seat. One of the most frequent questions I get asked by people looking to start or build their careers, oh, how do I get on the sustainability team, that core team of maybe 5 to 10 or 20 people, particularly in the corporate space? It's very hard. But every seat, you can ask the question of, how can I make the supply chain more sustainable? How can I make this marketing product be more sustainable? How can I have an impact? So every seat today is a sustainability, but once you answer your question, or to Yolanda's point, what am I actually interested in? Then you can actually drive sustainability from the seat you have.
Wonderful. Thank you so much, Chris. I think definitely knowing your seat and knowing your strengths will be key. To round off in the final 2 or 3 minutes, I could ask Dr. Bai also to share a few of your thoughts.
Sure. I think I 100% agree with what Yolanda and Carissa said. I may just leave 3 sentences to folks on this panel on the phone. One is, if you want to go down this path and then choose this area, I think one thing, most important thing, is ask yourself why. Do you really care ESG, or do you think this is just hot? If you think it's just hot and then you don't really care, think again, because everything goes hot will go cold. And 2005 was the time I get into the financial industry for sustainability. It was hot in 2005 to 2011 in the States, and it was a freezing cold from 2011 to 2015. So anything goes hot will go cold. Make sure that this is something you really care about. Is that endless the passion that you care that carries you through the downturn. So I think the first thing is, do you really care? If not, think again. The second thing is, if you really care, take that can-do attitude, just as Carissa said, because there is a will, there is a way. There's always a solution. This is the beauty of technology and willpower. There's always a solution. The third is to just Yolanda said, this is a very new area. Be open-minded, keep learning. It's a lifelong learning process. I've been keep on doing this for 20 years. I never get bored. And like every day, I read 1,000 business plan a year. And then every day it's always new things. And you'll be amazed by, where did that come from? And then it's amazing learning experience. And then that will be lifelong. So do you really care? If you care, and then there's always a way to make it happen. And lastly, keep learning.
Fantastic. Thank you so much, Dr. Bai. I think really wise words from all our panelists to end off. I think really needing to start off with that caring and that passion, as well as will really fuel a lot of that resilience, that curiosity, and that sort of want to learn more about the different disciplines, to have that interdisciplinary skill set to lead off. At this point, we're right on time at 11 o'clock, so I'd love to send deep thanks to our panelists, Dr. Bai, Carissa, and Yolanda, also to the IBF team for hosting. Wishing everyone a wonderful morning and enjoying the rest of the career fair.